There were some huge improvements in the market indicators, but they were offset by some more negative movement in the general economy this week. I'm Tony with Clarkson Santoro, and this is our real estate update for February 24th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 13 homes, down from 16 last week. The average asking price of those homes was $2,377,000, which is down from last week's average of $2,631,000. 5 homes asking an average of $1,447,000 went pending this week. That is more pending homes than last week's number of 4, with a lower average asking price from last week's $1,742,000. A total of 2 homes sold this week with an average sales price of $1,301,000. That average price was down from last week's average price of $1,933,000, and the total number of sold homes was lower than last week's 3. So now that we know how the market performed this past week, we can look at the broader trends that give us insight into the health of the market and help us understand where it might be heading. But before we do that, if you find this information helpful, you should subscribe on YouTube or follow us on Instagram so you won't miss the next update. And you can also share this with a friend so they can be informed on their local market as well. Now on to the market indicators. Inventory dropped again this week, down to 13 single-family homes on the market here in San Ramon. This remains the single biggest factor in home value retention in the area. Homeowners are not selling unless they absolutely have to, so the law of supply and demand keeps prices from dropping. Last week we gave this indicator a score of 80, and it will move up to 85 this week. The turnover rate remains high as the lower priced homes in the market continue to perform very well. We are now at a market turnover rate of 170% of a normal market. This metric continues to be more volatile than it typically is because of the exceptionally low inventory, but it has remained above 100% for the past 3 weeks. Last week we gave this turnover rate a score of 52, and it will increase to 58 this week. The over-under number continues its steady improvement this week. We are now at about 0.5% under the asking price for the average single-family home. This indicates that both buyers and sellers' price expectations are really coming back into realignment with each other. Last week we gave the over-under indicator a score of 39, and it improves to 45 this week. The 30-day average sales price dropped back down this week. This continues to point to more of the fact that homes in the 1.6 million and lower range are selling quicker and more frequently than the 2 million plus homes that have been on the market for longer. So not really a reduction in home value as much as it is a picture of what type of home is selling right now. Last week we gave this indicator a score of 59, and we will be dropping it to 54 this week. The health of the tech industry in the Silicon Valley remains a weaker part of the market indicators. There were more layoffs announced this week after that news had kind of slowed down in the past couple of weeks. And the high-tech equities dropped in value again, as is indicated by the Invesco QQQ fund. Last week, the tech equities indicator was scored at 37, and it will drop a few points to 34 this week. And sadly, the interest rates were another negative mark on the overall health of the market again this week. We saw the national average move up another 18 basis points, and we are now at 6.5% for the 30-year fixed-rate mortgage as a national average. As the cost of money goes back up, buyers will lose the ability and the motivation in some cases to buy as much home. Last week, interest rates got a score of 35, and it will drop more to 32 this week. As a recap, the overall market seems to be staying in this new equilibrium we've been experiencing over the past few weeks. As inventory stays low and turnover continues to improve, the general sense is that we are in a more seller-friendly market at the moment. The only thing holding it back and keeping it a little more friendly for buyers is that the higher-priced homes in San Ramon continue to stay on the market for longer, giving a little more room for buyers to take the driver's seat in negotiations in that price range. Last week we scored the overall market at 50. This week it'll move up just 1 point to 51. I hope this weekly commentary and summary helped you understand how our market is affecting your options. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, remember to share it with a friend and hit the like button and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.